what's new and what are the opportunities either by industry or just that aren't being served as we see this tight labor market?
Yeah, so John, this is a category of investments that we're particularly excited about at Benchmark. We are actually a lead investor in Upwork. Hayden Brown's done an amazing job there the past couple of years, and we see this as a big, big opportunity. And Sumir's done an incredible job in his category. I think you're going to see more players in other verticals. People have talked about kind of, the opening up of LinkedIn where people go into more specific verticals and are able to drive better outcomes, real work opportunities right away. It's not just a listing. You actually have action. When people sign up for Instawork, they're quickly put into jobs. The app tells you exactly where to go. The app teaches you how to do the job better before you actually show up, so quality goes up. There's a lot that's going to happen in this category.
Sumir, Bill mentions LinkedIn, and LinkedIn really leans toward white collar, really leans toward knowledge workers. There's not a lot of blue collar presence, frontline worker presence. And it seems to me that in the marketplace, there's not a lot of information about who's good at that very important hands-on work that's in such high demand in this economy. Is that a problem you're solving for?
Absolutely. And I think that analogy to LinkedIn is really sound. When one of our skilled hourly professionals signs up, John, on Instawork, they're uploading their certifications, they're uploading their references, we're collecting a lot of quality signals on what makes them great. And going back to the theme of flexibility, our professionals make nearly double minimum wage. Our best professionals can make even more than that. They can get paid instantly when they clock out of a shift. And so what we're actually doing is rewarding quality on Instawork with faster pay, higher pay, but most of all, flexibility, which is what these professionals want. They're building their digital identity on Instawork and using it to achieve greater economic opportunity. And, our professionals were proud to be frontline workers servicing, SF Marin Food Bank and the Javits Center during the pandemic. Now they're excited to get America back to work. They're excited to support Marriott as hotels and tourism reopen. They're excited to support retailers like Nordstrom and Staples that are preparing for record Q4 as supply chains get disrupted, and we're here to serve them.
Bill, it's Deirdre. Workwise is a platform that places and it trains workers in a similar space. It's moving into hospitality. It just raised $300 million at a nearly $2 billion valuation. Has a bigger marketplace, it's better capitalized, has that training edge. How do you guys compete with them?
I've spent a bit of time with the founder there. He's actually quite impressive. They got started in oil field services, and they're dealing with a type of work unit that's very different from what Instawork is doing. I actually think that there's, as I mentioned earlier, massive opportunities. We have about 8 investments in different verticals with these type of talent marketplaces. And so I think a rising tide's going to lift all the boats here. I think it's going to be a long time before those two types of companies would end up competing with one another.
Sumir, quick question for you. Tillman Fertitta joined this funding round, and he obviously has a need for labor at his businesses. I wonder, how did that come about?
Well, Deirdre, we support a variety of hospitality businesses, hotels, restaurants, catering companies, and Tillman heard about us. And I know you and John have had him on the show many times, and he was so excited about the ability to fill open positions quickly with quality workers. He and his team reached out and said, how can we get involved? And we happen to be raising a round, and it's great to have Tillman on board. Obviously, as you mentioned, a lot of great hospitality brands in his portfolio. And it just shows, I think, the leadership position that we have in building this future of flexible work, particularly for the service industry, for the industrial sector as well.
Bill, let's broaden this out a bit now. There's a lot going on in tech right now, and there's a lot going on when it comes to China. That's a space where Uber, one of your big investments, had competed vigorously and ended up with a stake in Didi. And we see now the Chinese government cracking down on Didi and on several other companies there in what looks like a desire to show who's really in charge of this economy. What do you think the impact is going to be on direct and indirect investments in Chinese companies and the way you look at the global marketplace?
Yeah. Well, if you look at it quickly with respect to Uber, there's actually two forces because Uber owns, a position in Didi, which was worth $8 billion at the IPO, so it's a little less now. And you can calculate exactly how much that should impact Uber's stock price. Uber also competes with Didi internationally. And so whether or not this affects Didi's ability to be competitive is a different force that could impact Uber's valuation. I think it's, remarkably interesting what's happening. If you just back up a year ago, we were all talking about the U.S. regulatory bodies like kicking the Chinese companies off of these markets. And now all of a sudden you have the Chinese government say, well, we don't want them on the NASDAQ or the NYSE, which is completely flipped. The one area where I don't think people have spent a lot of time kind of investigating or thinking about is when these Chinese companies start with like a Bermuda entity and then go public on an American stock exchange, that money's outside of China. And I wonder, and I don't have any data to back this up, but I wonder if part of what's going on is that the Chinese government wants to make sure that that wealth is actually kept inside of China, taxed appropriately, and then able to be regenerative in that market.